Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Jonathan Olsen of Unorthodox Ventures. Jonathan, thank you for joining us.
Thanks for having me, Hall.
So what was your background before investing in early stage companies?
Yeah, so back in graduate school, I got into agricultural engineering because I've always had a curiosity for fun and interesting problems, not because I have a background in agriculture. Worked with the USDA on improving energy efficiency of poultry housing. Did a pretty good job with that. From that, I got a fellowship to go to University of Illinois to do more agricultural engineering. And for about a year of that, I was doing some really interesting projects, but nothing that necessarily fit together to a PhD. And decided that I wanted to take a year sabbatical to kind of figure out what a big problem in the world would be worthy of solving with a PhD, because I kind of noticed that people getting PhDs in agriculture grew up in ag. They knew how they were going to save the world and knew how they were going to spend the rest of their lives. Most of the companies in ag environments are not that exciting. But through a contact, I found Big Ass Fans, big ceiling fan manufacturer in Kentucky. And very quickly, sitting down with the CEO there, joined up with their team to kind of do a year-long stint with them. But within 6 months, realized that I was doing much more impactful, much more interesting projects on a much faster time frame than I was going to be doing in academia. So I decided to join full-time to Big Ass Fans to work in their kind of outside of the box R&D group. After a few years there, I was then running that group, doing things like preventing spoilage of produce, preventing the spread of disease, improving thermal comfort, many things that are on the biological side or the application side of fans, things that open new business channels for the company, doing things that really dollar and cents impact, not things that were just a paper on the other end. So I was really enjoying that. Pretty soon after starting to run that group, the founder of the company came to me and said, "You want to do this new thing? We're selling the company, and a few of us are going to go take his money and start an investment group." We weren't really calling it an investment group at the time. It was more vague than that. We're thinking we're going to do something big with his money, because he was not wanting to retire. He enjoys business way too much. This is Kerry Smith. So we kind of snuck out at first, but then when the sale of the business officially closed, he was $500 million richer, and we were trying to figure out what we were doing. For the first 6 months or so of the new thing with Kerry Smith, wasn't even called Unorthodox Ventures yet. We were thinking we were starting new businesses. We discovered there's opportunity for us to apply our business knowledge to businesses that they had great ideas, they had great people, but they did not have the business experience. So about 6 months in, we decided Austin, Texas was a interesting up-and-coming area for innovation, but there was kind of a lack of manufacturing expertise and business rigor in some of the things that we're seeing. So we, 7 of us at that time, uprooted from Kentucky and moved to Lexington, and it's kind of taken off since then. At that point, we realized, okay, now we're actually a family office. We're actually investing. We don't really have constraints on how we invest, but we're a family office, and Texas is the place to do it.
Well, that's great. Sound like you had a good experience there and learned a great deal about investing in a startup, and it worked well. So for the investors out there, what's your advice for those who want to invest in startups? What would you advise them before they actually do so?
Yeah, so somewhat new to this. I mean, we're probably a year into the investing side of things. We have one investment that we can really talk about, and many other on the kind of closing stage, things that we're purchasing, things that we're investing in. But the we're trying to do is use our knowledge where we can be helpful. We kind of see too much of people sticking their noses where they don't belong in businesses that they don't understand and actually hurting them in the long run. We understand marketing and manufacturing and sales and how to nitty-gritty run a business because it was what we came from was a bootstrap business that was 20 years old. But we don't understand software, don't really understand services. We understand brandable consumer goods, industrial goods, things like that. So I think my advice, if you want to kind of improve your chances of success and improve your chances of being helpful, find a realm where you can actually be helpful and you're not that ex-CEO of a company that had nothing to do with something else, and you're telling somebody completely different industry to go down a channel that is actually kind of toxic. It's not good for investment returns, and it's not good for the entrepreneur that you're investing in.
Well, that's good advice. So you've been investing for some time. And what have you learned about investing in early stage? What were some of the key takeaways you picked up so far from the time you spent with it?
Yeah, I mean, it is back to there's lots of money out there. Money is kind of cheap right now. Everyone wants to put it in an interesting place. Early stage companies seem to be giving away too much to be healthy at the really early stages. That might seem like a good deal to a startup or not necessarily a startup because you're giving away too much. It might seem like a good deal to an investor. But what happens is you're scaring away future people who can actually help the company, and you're overvaluing it for the entrepreneur, and you're increasing the chances of the thing failing in the long run by taking too large of a chunk, and you're disincentivizing the entrepreneur as well. So the whole, maybe how inequitable some of the early stage transactions have been that we've seen connected to the companies that are interesting, it's been surprising to us.
So you have to make sure the entrepreneur is still engaged and motivated to see the business forward in doing this. You can't put it all on one side or the other. It's got to be a win-win.
Yeah, it's really about the people in terms of where the value is. You got to keep them, make sure everybody is excited and incentivized to stay on board.
Right. So what is your investment thesis today? What do you look for to pursue as potential investments?
Mm-hmm. Yeah, so it has to fit the type of products that we know we understand the path to market with. Physical, brandable goods with a clear consumer. It doesn't have to be a consumer good in bunny quotes. A consumer to us could be someone that's a warehouse manufacturer or a warehouse manager or a physical therapist or something like that. Just a clear person that you can market directly to and you don't have to go through many intermediaries is what we like to go after. So not software, not services. We like things to be manufactured in the United States because we're really all about high quality, and not having something overseas makes it really hard to control quality. But the problem is most of the time, early stage companies don't have the opportunity to manufacture in the United States. So that's something that we kind of will help with, is to increase the quality and maybe bring it back here. In terms of who we're talking about, I mean, it's really about the person. We have to like the entrepreneur. We have to trust that they're going to be able to run with something and take advice. And it's really about trust, the inside of things. Other criteria would be, we like things that have a little bit of revenue because it's got to be market tested. I mean, it can sound like a great idea to us. It can sound like a great idea to the entrepreneur. But if you don't have customers, it's just an idea. It's not a real thing.
So do you have an example of a startup that may fit that thesis you can talk about?
Yeah, one that we've invested in is a Go Fish Cam. It's a fishing camera that goes on your fishing line. It's really like the product because it lets you see into a world that you would not otherwise be able to see into. You can get excited about it. You can have customers that get excited about it. We like the guy behind it, Brandon Austin. He's working with us now. I feel like he really understands the fishing world and what those customers want and need. It's a real physical product. And it also has brand potential beyond just the camera.
Well, great. Sound like a good one there. So what are the challenges in starting up a business today? What do you find you're dealing with most along the lines of regulatory challenges or market or technical challenges that hold entrepreneurs back?
Yeah, it seems like people feel a lot like things have to travel down a certain path to market. You have to, if you're talking physical products, you got to go on Amazon, or you've got to get into the big retailers or things like that. Or you got to spend tons on digital marketing. These must-have things. And we don't really necessarily see that as musts. And often it's a way to, if you're not thinking about it, it's a way to waste a lot of money really fast or lose control of your product and your customers really fast. So I think a challenge is to make sure you can really control the message, the customer, the quality, the everything as much as you can in order to build a really minimum viable product or something that people are getting excited about without losing control of your product, your customer, your quality.
Oh, great. So if you had to pick a couple of subsectors or applications out there in the market today that you think are really great, what do you see as immediate opportunities for entrepreneurs that they could be pursuing today?
So food it seems very interesting to us. We don't necessarily have expertise in food manufacturing, marketing, sales, but we do have direct-to-consumer marketing research experience. But it seems like an industry that is ripe for disruption. We like things that are, there's lots of people who are way too comfortable in the industry because it makes it very easy to come in and change something completely and have a successful business, even though it seems from the outside that it's extremely crowded. So I think food is one of those. Health and wellness, some things are very mature. Medical tech, there's these existing channels that exist and you have to go through them or else that's not the case. You could probably do something else and make much more money than somebody else. So it's kind of looking what everyone else is doing and saying, because everybody else is doing it, there's probably opportunity there to do something different.
Great. So the last few minutes that we have here, what else should we cover that we haven't?
Maybe just to reiterate to the people looking for money that money is probably cheaper than it seems like when you talk to the first person that is offering up money. And it's really important to find a partner that you feel like will add value to your team and will work for you, and maybe not go after the first person that tries to throw money at you. There's nothing wrong with trying to bootstrap a while and building a more sustainable business. We like to, whenever we invest in things, it's the goal is to help them create a sustainable business, because business in the end is really about making money and growing a business and building wealth for people. It's not about collecting more money. That funding is not the end, it's the beginning often.
Well, that's good. Good information. How best for listeners to get back in touch with you?
Yeah, you can find us at our website, unorthodoxventures.com, or on LinkedIn, John Olsen, connected to Unorthodox Ventures.
Great. We'll put those in the show notes so people can get back in touch with you. And thank you for coming on today, and looking forward to having you back for a follow-up soon.
Yeah, sounds good. Thanks, all.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.